Welcome to the Western Producer One Beer Markets Update. I'm Phil Franz-Warkentin, and I'm joined here today with Jerry Klassen of Resilient Capital. He's been following the grain and livestock markets for the past 30-ish years and in various contexts, and we're happy to have Jerry join us today to fill us in on some of the key points to watch in the markets. Yeah, so welcome here, Jerry.
Oh, thank you.
One thing on the top of mind for cattle producers, at least these days, has been the record high cattle prices we saw earlier this year. They've kind of come down off of those highs in over the past few weeks. And what are you watching in the livestock markets right now?
I think what's going on in livestock markets is we have quite a bit of news coming forward here. But I think more importantly, if we kind of look at the fundamentals, it looks like the cattle on feed 180 days or more in the US are up sharply from year ago levels. And they're starting to increase in Western Canada as well. So that's putting some pressure on the live cattle markets, and it's spilling over into the feeder complex. What we've seen here is that we got some rising feed grain prices in Alberta and also in the US as well, with the corn market percolating higher. So that's adding an additional weight onto the feeder market.
I know I was reading something on the New World screw worm, and the closure of the U.S. border to Mexican cattle has been sort of behind some of the strength, and there's talk that may be ending. Is that something you're following as well? If what could happen there on that screw worm situation?
Well, I think there's a lot of political pressure from the Trump administration to have that border opened. Yeah, President Trump's been talking about getting the price of beef down, and that's probably the quickest way in the short term to kind of set a negative psychology on the market. Apparently, there's quite a few number of Mexican feeder cattle kind of near the U.S. border there, kind of waiting for the border to open. And so they're just in the process of getting some policies and procedures in place and I think once those are in place, then we'll probably see some updates on a timeline. But at this stage, I think what we've learned and what we've heard is that it's getting closer to opening rather than farther away. So I think that's one thing that's weighing on the feeder market in the deferred futures.
Okay. And on the other side of the world, also on the topic of trade and borders, as far as the Canadian canola market goes, there's been some activity lately on, possible talk of reopening there, or the tariffs on Canadian canola and also peas. And Mark Carney spoke with the Chinese president recently, and I know our ag minister was out there having some talks. How is that coming to play? Thoughts on that in the canola market?
Well, the Canada's agriculture minister, apparently he came back here earlier this week, but we have no confirmed timeline on when the Chinese government would lift the restrictions on Canadian canola or the tariffs on Canadian canola. And so I think, I think it's positive that the relationship is thawing, that they're getting closer. But I think more importantly, if you look at the futures market spreads, I was looking here today, the January-March spread was trading around $11. But if you look into the deferred months, the May-July was trading around $5. So I think, between now and spring, the commercials are expecting trade to increase. Maybe not to China, but apparently it looks like the fundamentals are getting a bit tighter once we get closer, should I say, in the latter part of the crop year. And so I think it's important just for farmers to watch those futures market spreads, because that's considered the commercial position, which is the smart money.
So as that spread narrows, that's a sign that they're optimistic on exports going forward.
Yeah, I think what could happen is, the market or the spreads are maybe incorporating a bit of a risk premium. Every time we hear, a little bit of positive news, again, that kind of shows that there's potential for that border or the tariffs to be lifted sooner rather than later. So I think the spreads are starting to incorporate that as well.
As far as the canola market, anything else you're watching apart from the tariff trade China situation?
We're always monitoring the domestic crush, and we've had the canola has been more highly correlated with the energy complex here over the last 3 to 4 months as well. So we're kind of looking for that Canadian crush pace to increase, after Christmas, as well as we see some new capacity come on stream. So I think that's another factor that the trade is watching pretty closely.
All right. And I guess finally, while we have you here, the wheat and barley on the grains. I know that there's been a strong export demand for Canadian wheat and barley so far early in this marketing year. What are we watching in those the wheat and barley right now?
Barley, the export pace for barley is almost twice as much as last year. So what we've seen here is, the year over year increase in production is largely being absorbed with the year over year increase in exports. And so again, once we get into that latter part of the year, it looks like the exports are draining barley supplies from the non-major feeding regions of Western Canada. And so feedlots are having to source from farther distances. And that's kind of putting some upward pressure on the barley market. And I think we can make the same argument for wheat to a certain extent, that the wheat exports are up from last year. And, that old saying, at low prices, we encourage demand. So it looks like we're going to have some tighter spring wheat stocks in the latter part of the year. And I think throughout the fall period, we've also, the trade has got a better handle on the actual volume of milling quality. And I think that's lower than what we maybe anticipated in August. We're hearing more reports of sprouting, some, fusarium damage as well. So some of that wheat has to move into the domestic feed market. But at the same time, we're hearing that milling supplies in Western Canada are probably, lower than what we earlier anticipated.
So could watch for some movement on the protein spreads on wheat going forward.
Yeah, I think so. I think we're all anticipating, when we get that final Statistics Canada crop report, we're going to see, some pretty good yields in Western Canada, and that's usually correlated with lower protein. So we're going to see some, maybe some strength in the protein premiums here in the latter part of the crop year.
Okay. All right. Well, Jerry Klassen, thank you very much for joining us today with the One Beer Markets update from the Western Producer Markets Desk.